Hi there, this is Alvin from Dr. Wealth. Today we have another video in our short trading series, and I have invited Robin, who is also our Dr. Wealth 8FTB course trainer. And today Robin promised me that he will be sharing with us a 20-year-old trading secret that you can do it on Singapore banks, and it doesn't take a lot of effort. What I understand is you only need 4 times a year to do the trading. So Robin, can you tell us a little bit more about this?
So we all know that Singapore banks, right, they have strong earnings, and most of the time, all right, except in a recession period, banks their earning, tend to be just on an upward trajectory. All right, and so it's like, almost a no-brainer.
Yeah.
So every time when you come to bank earnings, most times, right, it will be up. Seldom we hear bank earnings, quarter to quarter or year to year going down. All right. So most of the time it's up, and because, right, most of the time it's up, you get excited about banks when it is nearing the earning announcement. And a lot of people, right, including institutions, right, they will sort of try to preempt the earnings, and they will buy it like a month or so before the earnings is announced. And most times when the earnings is announced, not only we hear of good earnings, we hear of dividend going higher and higher. All right. So a lot of people will just time their buying, like, 1 month before, and when the result comes out, the price goes up, they will sell it.
Okay.
Yeah. So it normally, like, peaks during the day when it announced. So the other time when they buy it, right, similar story is before the ex-dividend. So it's like, if everybody knows that when it comes to ex-dividend, you're going to pocket a lump sum of those dividends. All right, everybody will start buying also like a couple of weeks before the ex-dividend. And when, the smart trader are the one that sort of preempt those people coming in, and they buy before those ex-dividend date. All right, and they will sell on the ex-dividend date. Okay, so that's how it goes. Very simple strategy.
Okay, so what I hear is that it's trading on the earnings date as well as the ex-dividend date,
That's right.
which happens 4 times a year. That's why you only so-called work 4 times a year, even for the full-time traders, right? So it sounds like a very fascinating kind of trading strategy. So if possible, can Robbie show us some examples?
Okay, so I want you to take a look at my Singapore Bank Rebasing chart, 2 years chart, all right? So the price action here, right, over 2 years, it is showing, right, most times you see DBS, the chart, the price action is trading on top of UOB and OCBC, and therefore from the rebasing chart, right, it tells you the relative strength of the bank, the 3 banks. So you could see that as a norm, right, on the average, DBS tend to be a forerunner, followed by UOB, followed by OCBC. And from this chart, you could see that the banks actually outperform STI. So if you have to trade that strategy, okay, you want to choose DBS, all right, to trade first. And after we finish with DBS, all right, you can follow up with UOB and OCBC. So you not only trade 4 times a year, but you trade 3 banks, which means you trade 12 times. And that's how people make a living out of this.
Okay. But you prioritize DBS.
Correct, which means that if DBS, right, is the first one that's going to be announced, normally it's the first one that's announced their results, first one that goes ex-dividend, and the rest follow. So if, in a sense, if you want to trade these 3 banks, all right, you want to put bigger bets on DBS. All right, so you could see, all right, a summary of the dividend payout here for the 3 banks and the dividend yield. So what is the reason for DBS, being the relatively stronger bank, as shown in my price action. So one of the reasons could be that, you know, their dividend yield is somewhat higher than the other two banks. All right, so you could see that, you know, DBS in 2022 is paying 6%, so it goes all the way, and UOB is doing 4.8, OCBC 5.46. And so this is the phenomena that I'm talking about. So Singapore banks have a tendency to go up 2 to 3 weeks before results and sell down after the day of the earnings announcement. So the idea is to buy, all right, before the greed comes in, which means before everybody now see the earnings and jump in. So most institutions, right, will do that, all right, because institution cannot preempt earnings. So in this strategy, you're actually like front running the institutions. All right, they come in to buy on good earnings and you sell it to them. All right, so that's what a lot of retail does. All right, and at times price may continue to rise after the result announcement. All right, sometimes very good. You know, it doesn't mean that, you know, it'll immediately come down. All right, but sometimes it overshoot a little bit. But in the end, there will be an imminent correction.
Okay.
Yeah. Okay.
So it's almost like the climax is the earnings date.
Correct.
So after the earnings is out, all the expectation is all priced in, and that's where the price starts to reflect the true market sentiments about it.
Yeah.
So it's almost like buy the rumor, sell the fact.
Yeah, absolutely.
Okay.
All right. So I mean, don't expect, you know, it to peak exactly at the announcement date. But at the announcement date, more or less, you know, it is about there. Yeah, more or less it's about peak already. So maybe overshoot 1 or 2 days is fine, as long as you can hold, all right, your shorts. All right, most times you will come down.
Okay.
Okay.
Yeah.
So okay. I mean, that's you know, the theory that I've talked to you so far. But we need statistics to prove, all right, that, you know, the price action in the past technically have been following this phenomenon. Okay, so let's start with DBS in 2021 earnings. Okay, so here, right, on this chart, okay, you see that DBS earning announcement is on the 10th of February, all right? So that's where it will announce its earning announcement. But, right, you can see that even before 10th of February, DBS was already turning up on the 1st of February. All right, it already started, you know, turning bullish, and people are, you know, just buying it in anticipation of good results. And you could see that after the earning on the 10th, right, it started dropping all the way, all right, to the 19th of February. All right, so DBS, right, you know, after the run up, it hit a high of 26.43, up more than 6%, and on 9th of February, before correcting to a low of 25.40, that is more than 3% down on the 19th of February. All right, so it went down 6%. Okay,
up 6% now. Up 6%, down 3%.
Correct. So it went down. All right. So so the next one. Okay. So next earnings, 21st April to 5th of May. So we are talking about earnings on 30th April, and it started running about 8-9 days. All right. Before 21st April, it started turning bullish, and on 21st, right, April, before you know, it went to trade all the way to a high, all right, of 30.12, and that's more than 5% 5%, all right, 5%, and to the announcement dates, all right. So DBS subsequently corrected down 3% after result announcement and went to trade to a low of 28.95 before rebounding. So another one. So let me just show you the next one. All right, how this phenomenon work, and this one a little bit special. All right, announced the earning announcement date is on the 5th of August. Started running on 19 July. All right, overshoot 2 days. So it overshot. Like I said, sometimes overshoot. All right, after the other announcement date. But by and large, it already peaked, and if you can wait long enough, all right, you see that it actually corrected, all right, downwards all the way to 19 August, and it hits a low there. Okay, here again, another DBS chart from 3rd January to 8th of March. All right, so this one a little bit more exciting, all right, in the sense that the swing is a lot more. All right, so the result announcement on 14th February, 3rd January, it already started running up, all right? So it went to as high as 37.49 on the earnings date, and that's up more than 14%, right, on the day of the result announcement, and subsequently it went down after the announcement, 17%. So 14 plus 17, if you get it right, is 31%, okay? All right, so that's quite a lot, right? And that's even without leverage.
Yeah. So do you trade leverage with this? Because I know that traders usually they like to trade with leverage and to enhance the returns. In those cases, like 5-6% in like 1-2 weeks is actually already not a bad return, right? If you extrapolate 4 times a year, you can easily make both sides about 40% per bank stock.
Yeah.
Right? But what if you leverage? What are the kind of returns that we look at?
Okay, so today, right, you know, we have derivatives, like direct leverage certificate, in short, they call it DLCs. And that is quite a popular instrument now among traders, all right, because they can use it to leverage. So for stocks, right, they can leverage about 5 times. Okay, 5 times. So in this case, if you get it right, 34% times 5. Okay, so that's how much you make 100% returns.
In a span of about 1-2 months.
Yeah, but I must say that, you know, derivatives like DLC, they are risky products, all right? So if you don't know how to use it, for example, if you don't know how to use it and you get bullish on the results day and you jump in and buy on 14th February in this case, I mean, you get whacked the other way around. You know,
it's a double-edged sword.
Correct, it's a double-edged sword. So you need to understand price action, you need to understand how strategy works, when to get in. If you want to use leverage products like DLC, because it cuts both ways, all right, can lose a lot of money, you can make a lot of money, all right? So that's why you need to understand how this whole strategy works.
Okay, so if you want to learn more, you can join Robin's Telegram channel where he talks about leverage trading on a daily basis. Okay, so I will put the link in the description. So now let's carry on with our trading strategy. Do you also have for the dividend, ex-dividend part of the strategy?
Oh yeah, so Singapore banks before ex-dividend phenomena. So the strategy is about the same.
Okay.
All right. Buy before the greed comes in. All right. So you buy before the greed, and the greed means people want to go and earn the dividend for free. But you know, you all know nothing's for free. Okay, so Singapore banks, right, they tend to go up 1 to 2 weeks before ex-dividend date and sell down after the ex-dividend date. All right, so how do you know when it goes ex-dividend? All right, you can go to the bank website, you can go to the SGX website. Okay, so first example, we all go back again to the 2020. And you could see that the ex-dividend date, right, in this instance is 12th May, and the stock started getting bullish on 22nd April. Okay, and the ex-dividend price, right, is 66 cents. So it's quite a lot of money, right? 66 cents. And you could see people 22nd April already starting to get bullish until the ex-dividend date on 12th of May. So DBS, right, went to trade to a high of $20, up 8%, all right, one day before the ex-dividend date on the 11th of May, before correcting to a low of 18.96, and that is down 2% after the ex-dividend date. Okay, so first example. Second one, all right, we're talking about the period between 4th August to 14th September. So, so the ex-dividend date is on the 14th August, but on the 4th August, 10 days before the ex-dividend date, you could see the very sharp climb. All right, in this case, a very sharp climb. And we're talking about a 9% climb, right, from 4th August to 14th August. All right, before correcting after the dividend all the way down 7%. All right, so we are talking about now 9 to 7, which is 16%, and that's quite a lot too. Okay, so now we go to another example of 25th March to 9 April 2021. All right, ex-dividend date is on the 7th April, and we could see that the minute the X started coming down, and to cut the story short, it was up 4%, down 2% again, altogether 6%. All right, another example very quickly, ex-dividend date on 10 May, started running on 21st April, and we are talking here about 5% up and 2% down again, about 7%. And here again, another one, all right, the ex-dividend date on the 13th August. So this one, right, it did not peak on the ex-dividend date, all right. It went higher, and then it went down before the ex-dividend happened. But by and large, after the ex-dividend, it comes down. Yeah. All right. So same phenomena, a little bit. The storyline changes a little bit, but we're talking about 4% up and 4% down, 8%. All right. And here again, we on the 9 March to 14 June, we're talking about ex-dividend date on 8th of April. It started running 9th of March, and we're talking about this whopping, 15% up and 15% down, right? So this one is a big one. It's 30%. You can see that sometimes, right, it's very volatile.
Yeah.
All right, it can go from 6%, to 30% up and down. All right. So this one is like, So okay. So this example very quickly, FOB is 8%. Same example, and then we are talking here about about 17%, all right, up and down. So we come to the real ex-dividend date now, all right? And example. What is the action to be taken? So today happens to be DBS ex-dividend date 10th of April, and we are making this video on the 10th April. All right, so today I took some action on 10th of April, and it is the action that I normally would take. So today, I just follow the strategy. Okay. So today my plan was this. Okay, basically, you all know, right? Is to short on the ex-dividend date, and today the market sort of gave me a present. All right, I think it gave you a present because, after the ex-dividend date, it traded at a premium, seldom. All right, normally it will correct. So today, the DBS ex-dividend should be about 92 cents down.
Yeah.
All right, should be 92 cent up. It's like 50 cents dividend and 42 cents special dividend.
Yeah.
So 92 cent. Okay, so let me show you, right, on my chat group, right, what did the people are all excited because I tell them the strategy. They're all excited, so they were buying a week before, and when DBS go up, right? So today they are all selling. But there's somebody, this lady called Wendy, a very active trader on DLC. All right, she asked me, all right, today now DBS dropped already. Can I buy the DLC long? All right, so my reply to her is that DBS today, it corrected on the ex-dividend date, but it corrected at a premium. Supposed to go down in the morning 92 cents, but it only went down 25 cents. So, a lot beat to short, right? Yeah. So that's what I did. So I said I shorted DBS this morning. All right, and then I said, don't get bullish until DBS retraced below its parity value, which is 31.92 cents. All right, before you even think of buying. All right, because that is the fair value for today. All right, so what I did today, right, you could see is that in the morning, right, when the market opened, I already shorted DBS at 32.55. All right, so I shorted at 32.55 for lots, and then I want to be a little bit greedy, all right, and I shorted using the DLC. All right, so I shorted using the DLC. I shorted I bought the short DLC. Yeah. So if you want the price, you think the price go down, you buy the short DLC. Yes. Right? So as the price goes down, your short DLC goes up. So what I did was I buy it at 1.12 at the market. All right, and while I'm doing this video right now at about 4 o'clock, is trading at 1.145. So it's gone up, about 2.5 cents. All right, and I'm riding on the shorts. So here you could see the chart, right? That today, all right, today DBS on the 10th of April. All right, it corrected and opened to 32.55, and that's down about 25 cents. And then you see after that, right, it slowly went down. All right, slowly went, because the idea is that the reason why it goes down is because like I was spelling out the strategy. People lose interest because everybody wants just to buy for that dividend, right? So when the dividend is over, it's like the climax already. Yeah. So it started slowly coming down. Yeah. All right. So that's what happens, right?
And I think there will be some arbitrage as well, right? Because there will be other participants who say that it should come down by 92 cents, but it only come down by 25 cents.
Correct.
So then those people who bought for the dividend, if I sell now, right, I actually make a gain out of it.
Correct.
So the selling pressure will keep mounting.
That's correct.
Until it really hit the full XD price.
Correct. So you have selling pressures coming from people who wanted to take profit, right? It should have corrected 92 cents, but it did not. So it was like extra bonus. Yeah.
And in fact, in most times, that based on the example you show me, they overshoot more than the XD. They
Correct.
more than the XD, right? So in this case, this is quite unique.
Quite unique.
Drop less than
right.
XD, so there is more meat for the downside.
That's correct. Yeah. So that's what I suppose it should happen.
Okay. So it seems like there are a lot of overreaction, right? Prior to earnings, prior to dividend, there's always a lot of overreaction, buying up, overextended
Correct.
on the upside. Then on the earnings day or the XD day, that overreaction correct.
Yeah.
Then you went the other direction, they overreact on the downside. So people start selling.
That's correct.
Right. Okay, so that is essentially the phenomenon that you're trading.
Yeah.
Okay. So, and you also mentioned about using DLCs. You showed an example, the leverage. Definitely the returns is going to be higher with the leverage, and it's a 5x. And if you want to short, you buy the short DLC, right?
Correct.
As opposed to you really sell a plain vanilla stock outright if you want to short it. So it's slightly different in that sense. So there are a lot of nuances about DLC trading. That's why I really strongly recommend you guys to join Robin's Telegram channel. where he will share more of his trading experience with you guys, how to enter and exit a trade, especially with derivatives like DLC. Extra care needs to be taken. Right. Can you show us your website?
Yeah, so if you want to join my Telegram chat group, all right, so this DLC Telegram chat group, right, is specially created, all right, to help people to trade leverage products, okay, and not, you know, just go in blindly, because leverage products are risky. All right. So here I share my trading ideas. Every day I have trading ideas on how to trade a DLC. You know, and mostly we are talking about, like, you know, in the daytime, Hang Seng Index is very volatile. So I share my, you know, my trading ideas. All right. I share my trades, and it's up to people who want to follow. If you want to follow, you can follow. If you don't want to follow, just, you know, just for information, please. Yeah, that's fine.
Yeah. I like the channel in the sense that you do explain, right? Why you come up with a certain view, why you're bearish, why you're bullish. Okay. So I think that there is a lot of learning points. It's not just, oh, I'm doing this, I'm doing that, without explaining, right? So I think that is the key difference, what Robin is doing in this Telegram chat.
Yeah, so our Telegram chat group, right, is primarily set up for educational purposes. Yeah. You know, to educate people how to trade DLC, all right, to tell people how to spot good stocks, you know, stocks that, you know, it's about to, you know, run up, all right. So we highlight to people, all right, trading ideas, potentially strong stocks. Yeah, so and then, you know, so first you must identify the asset class, the stocks, which one. And then after that, you decide whether you want to buy the plain vanilla stock or you want to leverage it. So if you are confident, all right, and then the idea I shared to you, you have some conviction, all right. So on my Telegram chat group, when I have a conviction, I will say this is a conviction, right? So when I say conviction, right, you maybe want to use the DLC, right? But, you know, otherwise you may just, you know, just trade the plain vanilla stock.
Yeah. Okay, so thank you very much, Robin, for sharing your 20-year-old trading secret on Singapore banks, and I really like the simplicity of it, and it's capitalizing on human overreaction on earnings, on dividends, and I think it's a very quite a simple strategy to execute. But of course, again, if you're using derivatives, please be careful, and please like this video, subscribe to the channel, and we'll see you in another one. Thank you and goodbye.
Thank you.